The industry has normalized blowing 20, 30, 40 funding assessments like it's casual, like that's a normal thing to do, and that's not gambling. What we have normalized is that if you become a portfolio asset manager, so you hit the profit target and you become a portfolio asset manager, and you've got the emotional control and you're working on that, you're 80% likely to keep your capital over 2 years. Now those stats are getting into the 3 years and into the 4 years, and it's not really dipping off that much. Have you ever wondered why you can't access our in-house fund? It's not because we don't want you to succeed, but the reality is we are looking for the best traders that want to take their trading to the next level. Now in this video, I'm going to share with you how you can qualify to trade with our capital and how it's within your interest to do so. So for those of you that are new, maybe you don't know what prop firms are, you don't know what these challenges are, I'll explain it to you. When traders come into this industry, their biggest problem is usually capital, as in they just don't have access to capital. So funding firms have facilitated that. So what a trader would do is they would go through a series of assessments or challenges where they would be given a task to hit a profit target. Now sometimes that's in a duration of days. Most of the time it's either unlimited or it's a whole year to hit a 6 or 7 or sometimes 10% profit target. Now in exchange of that, you will get a profit split. So the whole goal is to essentially prove that to yourself, that you can manage your risk, you can pass that phase and then move towards having a live funded account. Now with that account, you will get put on a profit split. So let's say, for example, you've got a £100,000 trading account, you've passed the assessment, that's now your capital. You will have a split, sometimes they're 70-30, sometimes they're 80-20. So if we go off an 80-20, that you get to keep 80% of the profit that you make. Now there are certain rules that go into that. So that in a nutshell, for those of you just coming into trading and maybe stressing about, oh, I don't have access to money, it's an incredible thing to be able to leverage. However, there's always good and bad in something. So who are prop firms good for and who are they bad for? I think they're incredible for people that have an edge. I think they're incredible for people that have good emotional control, people that can demonstrate that. Not so good for the newbie, not so good from what I've seen over the last 2 to 3 years, where because it's a low barrier to entry, it makes people skip all the important steps of becoming consistent. And they believe that they can become consistent, but disguise it with gambling. They just don't realize that they're doing it. And what's happened, this phenomenon of influencers have normalized and made it really casual for people to spend, thousands and thousands and thousands, and sometimes people getting into horror stories of debt of 30, 40,000 pounds and not making a withdrawal, not making a payout. Common sense would tell you that's not good business. And the chances that you've done 30 challenges, 40 challenges, and they're all unique mistakes and each one is an actual lesson is very, very unlikely. Probabilistically, that's just not the case. You're still gambling, it's a tough pill to swallow. So it's good for people that have got an edge, and it's good for people that have got good emotional control. In between, not so much. So I'm going to explain to you the difference now between what have we created in our in-house fund. Why do we make it difficult for people to access? There is a very important reason for that. Our fund's a little bit different because we've intentionally designed this to move towards 100 million in capital. So the way that we train our traders is very different. We don't want all of our traders to be trading the same instrument. We trade in a unique way that our system can be applied to any asset classes. So we have some traders that are really great at trading gold and a few other instruments. We've got some people that trade indices really well, and some people just trade dollar cost pairs really well. And the beautiful part about that is that we have an invested interest in our traders doing well, because as our fund grows and as everybody starts to make money, we benefit from that. So we actually have an aggressive invested interest in making sure our traders are as skilled and as emotionally equipped as they possibly can be. Now there are some other good funds out there. They're differently set up to us. However, I always actually recommend our students to have another account, for example, like FTMO. That's a big one. They've been around in the industry for years. You can't argue with it. It's a phenomenal, phenomenal company. So a lot of our students will have capital with our in-house fund. They will be building their personal capital, and they will also have a 200K or a 400K plus FTMO. So the key part with us is, because we're not set up like your traditional prop firm, we have education, and we've started with education, is that it's more tailored, it's more bespoke. We're not there to the mass market, but our unique hedge is that we can create all of our different divisions. We know the type of traders, we know their personality, we know, where they're from, like we know them on a more personal and intimate level, which means they get a few different benefits that you can't get access anywhere else in the prop firm space. So for example, let's say we have a trader that's a really good trader, and for whatever reason, they scale up to $250,000, and they go through a bit of a bad patch, but they're not a bad trader. They just go through a bit of a bad patch, and maybe sequentially they hit the drawdown limit, they lose their capital. If you're going to go to even someone like an FTMO, etc., it's just going to be, look, it is what it is. You hit that drawdown threshold, you don't have your capital. And I understand why they're set up that way. It's not like an evil thing to do. That's their model. Where we can take more of a, I don't want to say punt, but we can look at those individual trades, assess it as coaches, myself and the coaches, and go, let's actually look at those trades that hit drawdown. Is this a reflection of their skill, or were they really unfortunate where they just hit a really bad sequence and they lost their capital? So we have the ability to reinstate that capital. Now you have to ask yourself, how much is that worth to you? That's just one added layer of the difference of what we're looking to build. The support that we offer is very different. Again, we're doing regular webinars. We're prioritizing things like peak performance. There's accountability. There's all the extra layers on top of you just trading your edge that has a big, big vital role when it comes to you being profitable. So of course, our traders feel very safe. They feel very secure, and we're really proud of that. And there's a reason why we've never denied one single payout in over 5 years. Since the history of the fund, there has never been a withdrawal that has been denied. And along the way, we've actually learned so many different things about our fund, and we've improved it, and we're very, very proud of where we're heading. So the main reason why people can't access our in-house fund is because we don't know them. So if someone just randomly signs up and they want to do a funded assessment with us, we haven't trained them. I don't know if they're any good or not. And truthfully, I don't want to mess with our numbers. Our stats are so ridiculously good. They are so high. When people pass on our in-house fund, especially those that have gone through our Rewired program, so they've got the emotional control, which is really the big part, they are 80% more likely to keep their capital for over 2 years. That has become normalized. So the industry has normalized blowing 20, 30, 40 funding assessments like it's casual, like that's a normal thing to do, and that's not gambling. What we have normalized is that if you become a portfolio asset manager, so you hit the profit target and you become a portfolio asset manager, and you've got the emotional control and you're working on that, you're 80% likely to keep your capital over 2 years. Now those stats are getting into the 3 years and into the 4 years, and it's not really dipping off that much. So imagine yourself as a student, you're learning a system that has an edge, you're going through all of the training, and you know that when you pass that account, you are statistically more likely to keep it than not. What do you think that does to your confidence when you're thinking about your infrastructure, you're thinking about the longevity of the goals that you want to trade, the money that you want to make? So we have an invested interest in not just letting anyone trading any strategy that could be really aggressive, something we don't agree with and that we don't like and we don't think is sustainable, then skew the numbers and affect our stats. We're not willing to do that. And there's not an amount of money that I would want to make to compromise that, because I actually care about building this fund, and we're already on track. We already had multiple millions of capital allocation, and in 2 to 3 years, we're going to hit that milestone. Everybody's going to see it. We're going to release all of that, and you will see the lives that are going to be changing, that have already changed, but continue to change on a much bigger level. So usually I don't make too many videos about our fund because it is exclusive for Falcon members or anyone who's in the Rewired program. They also have the opportunity to access it. Those traders, and you might say, well, Mark, they trade a different strategy, so why do you let those traders trade it? Well, they have good emotional control. So the correlation is there. I'm not saying that our strategy is the best strategy in the world and there's no other strategy on the planet that could benefit our fund, but I do not trust someone trading the strategy that lacks emotional control. So in that regard, they could be slightly more aggressive than us, as long as it's not wild, but I have the discretion to be able to look at that individual and go, right, this person is clearly optimized their system. They may take maybe a lot more trades than us. However, there is structure to it. There's an order to it. They're not out of control and their emotions are not up and down like a yo-yo. I can trust that person to trade on the fund, and that actually benefits the fund. The good news about the way that we trade is, like I said before, we're not all trading the same pair. We're not all just trading one instrument and putting the same trade on just one thing. And we've seen how that goes. Not a good idea. However, because we've got people that are just naturally good at different instruments, I mean, gold is going to move different to Aussie yen or euro dollar. So there's a certain element of, I wouldn't say specialize in them, but you naturally are gravitating towards particular instruments that you're just better at. Like, that is what it is. I've had that in my own journey over the years. So we get that hedge knowing that some traders might take a trade on, let's say Aussie yen, they take a break even or a very small loss, a controlled loss. And then some traders have taken, I don't know, euro dollar long and they've benefited from that. So the fund is moving nicely. And again, we've learned along the way, but we've managed that risk so well, we've got it down to a T. I don't want to mess with it. So if you're someone who likes the security element of what we've got, the scalability of what we've got, knowing that you actually have long-term sustainability, how you benefit from that is two ways. You're either a Falcon member, that you have access to it, or you're a Rewired member. And we're just not willing to compromise on it. And if you say to me, Mark, well, I'm willing to pay you for it. I don't want your money. You've misunderstood this. I'm not going to compromise some money or to make extra money to mess with this goal. The goal is very simple. That £100 million fund will change thousands of people's lives worldwide. I'm not interested, not everything is transactional. And I think people find that really hard and difficult to wrap their head around as to why wouldn't you just offer it to everyone and make money? You don't need to make money of everything. Some things are bigger than just being transactional. And I think what we've got here is something truly special. So if you want long-term security, those are your two options, nothing else. But even still, don't be coming in thinking this is just going to save you and that we have the best fund in the world and then you're just going to make money endlessly. You still have to work, you still have to learn the system, and you still got to do the work. But on the other side of it is the security that you won't get at. You won't get it anywhere else purely because they're just not set up to be able to do that. You're not going to get the level of support because again, they're not set up to be able to do that. And you're not going to see stats like what we've got, where you're statistically more likely to keep that capital. So this is the pathway on how you can benefit from our in-house fund. The criteria is going to become stricter and stricter. As the capital allocation increases, as it has done over the past couple of years, it's phenomenally gone up and up and up as we go from strength to strength. Naturally, we put more time, we put more energy into it, which means we're going to become even stricter along the way. So if you're someone who wants to get involved, I would get involved as soon as possible, ASAP, or you're just going to have to wait longer. If you don't need that capital and you've got capital, you get everything sorted, then this doesn't apply to you, and that's absolutely fine. But I'm speaking to the people from the outside that are always messaging in, recognize that they want that security. It's there for you. There is no time like the present to get involved and for you to be part of this 100 million. Think about how your life is going to change. We want the best of the best. We want people that, it's not even just about your results, by the way. If you've got the results but you have a bad attitude, I don't want that either. I want the best of the best, people that are going to add value to it. We've got a real community here that are pushing each other along the way. They're there for each other. So when you have your win, just like recently, we had someone who had their first withdrawal. It was 6,500. Nothing massive. It's just the start of what they're going to achieve. But everyone's celebrating that. Everyone's happy for that individual because they see how hard they've worked and they see how much they've been putting in the hours, putting in the time. Imagine being around those people that have a genuine interest of you doing well. And they're not bitter about it, they're not secretly jealous, like they love the fact that you do well because everyone is on that wavelength. That gets so much more out of you than what you realize. There's only so much you can do when you're in the shadows by yourself or you're in some little toxic groups here and there. When you're around real winners, it rubs off on you in ways that you just can't achieve by yourself.